Hubris. Well, at the end of the day, it's an incapacity to understand the complex interconnectivity of these economic systems today and this unbridled belief in the righteousness of one's actions. It's literally hubris leads you to make these kinds of very self destructive and bad decisions.
I was under the impression United States is a society where money runs the politics. Money, it ultimately it's a capital that dictate to the politicians. How is it we're now in a situation where the Trump administration is allowed to wreak havoc to the whole business ecosystem? I know they're responding to certain political pressure about decline of United States vis-a-vis rise of China, but at the same time, a lot of multinationals from US are still making tons of money head over heel in China. How was it that Donald Trump administration was allowed to take a sledgehammer to this whole enterprise?
Hubris. Well, at the end of the day, it's an incapacity to understand the complex interconnectivity of these economic systems today and this unbridled belief in the righteousness of one's actions. It's literally hubris leads you to make these kinds of very self destructive and bad decisions. I get the fact that, today's administration in the United States looks out there at the country and sees significant and growing pockets of social and economic malaise and discontent. I understand that there is a belief that the United States has hollowed out its industrial foundations and that many people feel a loss of sort of connectivity and groundedness in the things around them. That's entirely understandable as a sort of set of symptoms of what's gone on for 40 to 50 years. But the kinds of answers that were offered actually made things worse. Right? This is the folly of sort of a politics of nostalgia. So you've got hubris, you've got nostalgia, and you've just got this unbridled sense of sort of right. And when you've got that, almost as if it's a politics of a sovereign as opposed to the politics of an executive constrained by checks and balances, then invariably these kinds of offbeat decisions get made. The other thing to remember is that the dominant forces of capital that drive American politics is not industrial capital anyway, right? So the disruptions to it is seen to be relatively minor. The dominant forms of capital is finance capital and technology capital. And it's those that actually ultimately dictate the priorities and the terms of the American body politic. So it's misguided, nostalgic, hubristic.
Uh, okay, I'm gonna drill in deeper a little bit on that topic. Why is it then? Why would the finance capital or tech capital in US uh, have a hostile view toward China? I mean, like because uh, can they just? What's wrong with just settle down and do business?
Well, finance capital actually doesn't, right? One of the interesting things about finance capital is that it actually makes most of its money through the circulation of fictitious capital. It just trades paper. And so it largely dictates terms. And one of the problems for the United States administration is that it's actually the dominance of finance capital that has undermined industrial capital over the last 50 years. Um, Efforts to try to do something about this doesn't directly affect finance capital, so it shrugs its shoulders because nobody's actually pulling finance capital, back to earth and bringing it to heel. So long as they don't get affected directly, in many regards, they don't care that much. They continue to do what they do. The other interesting feature, of course, is you've got to look at the rest of the policy framework that has been rolled out in the last 6 months, and I speak particularly to the big beautiful bill. Right, so the big beautiful bill, in effect, created another round of system liquidity expansion as the American government expanded its own deficits. And what happens with system liquidity expansions in the United States is that most of that funnels through the circuits of fictitious capital. in the US stock market in particular, but also into real estate. So we've seen the S&P 500 continue to expand off the back of liquidity flowing into actually only a handful of companies. And we know what those handful of companies are. They are those companies related to AI, whether they're in the hardware side or in the software side. So you've got this nexus between finance capital and technology capital, together with a burgeoning government deficit that actually feeds liquidity into the things that matter to them. They don't care really about what happens elsewhere, provided that those circuits and those dynamics aren't affected. So that's the way I would tend to look at all of this, is that Trump was able to go and do all of these things, not because the others wanted him to, but because the others didn't care whether he did or didn't.
Oh, that's a great point. You brought up AI. Now, Powell just recently came out and say, "Oh, the recent current investment into AI is no way equivalent to the dot com bubble of the 2000s," which I thought was funny because I look at the two and there's glaring similarities when. When the dot com bubble back then clearly ran ahead of what the technology back then could deliver. And I sees very similar thing with AI today. The promise in the world with AGI, yet whatever with even hundreds of billions of dollars investment into data centers and AI revolution, we're seeing actually very little that kind of justify the level of investment that's going in right now. How long? How? I mean, it's. How do you think this will eventually be rationalized?
Well, there's likely to be a significant market correction, as they say, or the bursting of the bubble. The problem is that the promises are overrunning the capacity of the real world to deliver, and the evidence of that is the absence of viable scaling business models for a whole bunch of this activity. Industrial applications in the United States are relatively modest, and that, in any case, isn't really the focus of a lot of these publicly listed AI companies. They're more interested in things like either pursuing godlike or God inspired fantasies of AGI, or they're into trying to monetize AI via AI enabled video sharing apps, the AI version of TikTok, if you will. Or recently, as Sam Altman announced, they're going to release an age unrestricted or an age restricted version of chat, right? Which basically is trying to, grab into the business model and revenue flows of things like OnlyFans. If this is the business model for American AI, then it's going to be limited as far as its ability to deliver on the promises that have been made. And when that starts to materialize, we are going to see investors vacate. They will take profit. One of the things about these sorts of booms is that at some point, large amounts of stockholders will exit the stock and take their profit, monetize it, and move on. And it happened, as you say, in 2000, with the dot com boom. But let's not forget, this was the problem in 2008 as well, with the property boom. At some point, it came to an end when the real world was not able to substantiate the promises that were being made by the world of finance. That's where it's going to end up. The other issue that's going to become a real constraint on AI is going to come from the United States' inability to resolve its energy problems. AI is, of course, an energy hungry sector. Arguably, AI is really just a manifestation of energetic capabilities within your economy. And the United States energy system is both old and fragmented. Its attempt to augment so that it can meet the demands of the artificial intelligence industry is actually putting strains on the system at large, either by pulling energy or electricity away from other uses, driving up prices in the market, which has short term effects on consumers and other industrial users. But it also has what we call Dutch disease consequences, which is they create structural shifts in the demand for resources in the economy at large. And it will draw a whole bunch of resources away from other industrial activities towards AI and towards solving a problem for AI. What that means is that those other sectors end up becoming relatively undeveloped, and certainly undeveloped compared to what they otherwise would have been. So we have a contradiction between the expansion of AI and ambitions around rejuvenating American manufacturing, because manufacturing, modern manufacturing that is intensely energy intensive. Without energy, without electricity, without artificial intelligence, ironically, and without automation, you don't actually get the kind of manufacturing that can only take place in a place like the United States. We're not going to see more manual labor intensive sweatshops emerge in the United States. They already exist, right? But we're not going to get more of them. The only prospects for modern industry in the United States is high tech, energy intensive, AI driven, automated. So we've got contradictions now. The energy secretary, some weeks ago, talked about America facing a 100 gigawatt energy deficit over the next 5 years that needed to be plugged. Well, good luck. There's probably a good chance that the system as a whole can achieve half of that. And it's not that there lacks ambition, and it's not that there lacks money capital. The problem is the physical and human skills required to pull that off are simply not available in the quantities necessary in the time available. It's as simple as that. You can't manufacture enough skills that are needed for the kind of work that must be done if the American electricity system is going to expand in the order that's being talked about. There's simply not enough of the equipment, whether they're the equipment that goes into transformers, that they're just not there. So these are the constraints. Welcome to reality in a sense. The real economy, the world of physics, the world of materials, and the world of human capabilities ultimately is going to dictate how fast and how successful the United States is going to be able to resolve these bottleneck problems. And I think it's going to really struggle.
Well, you did mention energy, but isn't U.S. incredibly rich in hydrocarbon resources? And in fact, Trump is going 100% in on big oil right now. He's ditching all these federal subsidies on sustainable energy and saying let's just drill. Couldn't expanded production of maybe shale gas or shale oil make up for the shortfall in energy? And ultimately, it doesn't matter where the energy come from, whether from the sun or from the fossil fuels.
Well, there's a few issues in all of that. One is that it's likely that the shale oil reserves, in terms of uh, the energy return on energy invested curve, if you will, we've already gone over the top, meaning that um, uh, future resources are going to take more and more effort to extract, which means you need a higher and higher price as well for activity to be undertaken. So there's a challenge at the moment because current pricing for oil is nowhere near high enough to justify folk in the oil business to commit the resources that you need to extract the next or to open up the next set of wells. So that's the problem, right? We need prices in the order of $80 a barrel. They're nowhere near that. And again, there's trade-offs involved because you've got the economics that justify expansion of some of the more difficult and increasingly expensive shale oil projects. You've also got an impact on downstream impact on consumers with gasoline costs, but also for other industries. So we've got trade-offs that take place in that sector alone. But converting hydrocarbons, particularly in terms of oil, into electricity useful for the AI industry still requires a significant investment in infrastructure, and those bottlenecks remain. So just because you have rich sources, original sources of materials, doesn't necessarily mean you can build out the supply chain infrastructure that you need to extract, convert, and deliver. So I think that there are some real constraints. The broader issue, Carl, and this is one that I tend to think is the sort of really big picture strategic challenge facing the United States, is that the United States has, for the past 150 years, developed on the back of the ability to access incredibly high energy return on energy invested energy sources and systems, right? You know, when you could get oil cheap and one barrel of oil equaled so many, years of man effort. I mean, that was an incredible transformative resource for a national economy. But those easy days are actually behind us, and the United States is now in a position where its hydrocarbon resources are on the downward side of the EROEI curve, and that's going to become very, very problematic over the next 10 to 20 years. It's one of these things where I think the politics of energy, which sees a commitment to maintaining known approaches to energy and an ideological reaction to the renewables and other things, actually is hampering the United States' ability to make rational choices based on all available options.
Uh, but let's be devil's advocate for a second. You mentioned there will be industrial bottleneck for U.S. to build out its power grid. Well, couldn't just import from China? Couldn't just import the equipment from China?
Well, this assumes that they will import equipment from China. You know that there will still be bottlenecks because China is obviously supplying a lot of this equipment to many systems around the world that are developing their own energy distribution networks, and uh, it isn't that easy to just flip the switch and increase production outputs by 20-30% to cater for America's needs. So there will be production bottlenecks regardless. And the extent to which they exist, I guess, in part is going to be reflected in whether or not Americans pay more to, jump the queue, so to speak, and whether or not Chinese manufacturers will respond to that, which they probably will, unless there are strategic directives to, in a sense, commit to some of the larger scale energy distribution projects that China might get more involved in places like Africa and Southeast Asia. So, that's the sort of trade-off questions again. I mean, there are no easy answers in all of this stuff. So, I mean, mainstream economics often forgets that in the practical world, everything always takes time. And they sort of think, oh well, supply demand will adjust, and there'll be some magic process of market clearing at a new price. It does assume, of course, that things are just sitting around waiting for you to just flip a switch and miraculously make it all available. Um, that's not how the real world works.
Okay, but so why? How did United States get into this position? Because there was once upon a time, United States did reinvent itself. We saw that in the second industrial revolution. We saw that in the aftermath of the Great Depression. And United States, once upon a time, was very capable of investing its own infrastructure and put together the pool of human capital that's able to execute. So what changed?
Well, we've had growing financialization for 50 years. So the So if you look at the energy outputs in the United States, they've largely flatlined for 20 odd years. Right? The United States doesn't actually produce any more electricity than it did today, really, than it did 20 odd years ago. Its systems, to some extent, have become a little bit more efficient, but the change in the structure of its economy in terms of its demand for electricity has changed too. So as it evolved into uh, an economic system which was more services oriented, it actually required far less electricity outputs to support that kind of industrial structure. And there are legacy consequences to this, and they accumulate over time. Old systems systems get old. They're not maintained as they once were. Accountants, particularly in publicly listed companies, will often find ways to sweat assets, in other words, defer maintenance, because that looks much better financially. But these actions eventually catch up with breakdowns and in due course obsolescence. So These aren't things that you can say, at some point an error got made and therefore, we can just blame something. These were sort of systemic transformations that took place in the American economic, the political economy of North America. So about 50 years ago, the economic system in the United States began to explore um, offshoring opportunities. And we saw a lot of that take place in Japan, on the island of Taiwan, the Philippines, and places like that, where American capital established operations in these places and began exporting back to the United States. That was already happening, by the sort of late 1950s, early 1960s. By the 1970s, if you go back and read some of the policy literature and the academic research at the time, there were already concerns about American manufacturing being hollowed out. So this has been an ongoing problem. And as you hollow out industry, or as industry structures change, the nature of an economy changes. So the skills that used to be needed to work in shop floors and things, they disappear over time. People go and do other things. They're not renewed. The education system adapts because those kind of requirements are no longer there. And we see the emergence of whole new classes of employment. Wall Street, financial engineers, etc., etc., and they become incredibly attractive. And as people, go through an education system and get more skilled, where do they orient their activities? Well, even the engineers that graduated from some of America's best engineering schools have found themselves working in Wall Street. They don't work as engineers. They don't work in research and development, whether they're chemical engineers or structural engineers or hydraulic engineers or what have you. They actually all end up in Wall Street. So these are systemic changes that happened over the course of the last 50 years. They've been accelerated by some government policies, particularly policies around the deregulation of the financial markets and decoupling, or enabling actually, the banks to be both savings and loans institutions as well as investment banks. And so we now have an American political economy that, in many regards, just over time through processes of transformation and evolution, is a services dominated system, with a heavy financialized overhead.
Now, the question from that, obviously, can that process be reversed? I know if I ask Donald Trump, he will say yes, but whatever he has done so far is not really helping. But suppose we have a more rational leader in place, is it possible for that process to be replaced? Because the process of deindustrialization you're describing doesn't just affect the United States. This affects countries, UK as well. Many former leaders in industrial revolution now is going through the same process of decaying and deindustrialization. Now, can is it possible for that process to be reversed? You,
Well, it's interesting you mentioned these other places, Carl, because when I was cutting my teeth, as a postgraduate researcher, um, some of the first work I was doing in the early 1990s was on this problem of deindustrialization in Italy, UK, and all of those things. So these aren't new problems, right? Um, I think that the other way of framing this is, rather than reindustrialization, which often implies somehow reclaiming what's been lost, the only way to think about this is what future industrialization looks like. There is no winding back the clock unless you want to dramatically transform the structure of an economy in ways that will reduce living standards. We know this because the processes of evolution to date has actually led to progressively higher living standards for a lot of people. And I say that recognizing that the United States social settlement now actually has a lot of people for whom life hasn't improved for many decades, partly associated with all of those dynamics I was describing earlier, and for whom, in fact, it's gotten a lot worse, with 60+% of people living paycheck to paycheck, with food security being a problem for 13-14% of American households, for 20+% of households now skipping meals to be able to pay rent or mortgages. motor vehicle loans, delinquency rates are rising back to levels that we haven't seen for 20 years. Ditto credit card loans, et cetera, et cetera. So clearly American households, particularly working households, are under incredible pressure. So the American body politic, if you will, I think has reached a point where the anxieties and anger that have been percolating and accumulating for 40 to 50 years have spilled over, which is why we have the political phenomena that we do. Promising those people that you can turn the clock back and go back to how the world was in 1955 with Fordism, single income earner households, 2 kids, front yard, and all those things. Well, that's fantasy land stuff. And as much as that kind of nostalgia mobilizes voters to get out and vote, in the end, it also sets them up for massive disappointment. The only way in my view, for the United States to transform its economic structure is to focus on what technology can actually do and harness technology in ways that deliver new kinds of jobs that are high value adding and which enable people to have high quality work and life relationships, right? So, how does North America train a workforce that's capable of doing these things? Right? What are the investments that need to be made? Let's take shipbuilding. Shipbuilding is a complicated business these days. The United States hasn't really been in the business of making ships for 70 years. It began undermining its shipbuilding industry, ironically, in the 1920s when it introduced legislation to protect shipbuilding. And by protecting shipbuilding, it created massive disincentives for innovation and productivity improvements. So, if America wants to rebuild a shipbuilding industry, um, rather than simply approving Korean shipbuilders to build nuclear submarines in North America, which is what's happened in the last week or so, we now have a situation where you've got to commit to rebuilding an entire maritime workforce. Right? Building ships needs skills of certain types. None of them really exist in America by any stretch of the imagination. Um, is the US political and education system set up to enable those things to happen? And if that was the pathway that was necessary, that's a 20 to 30 year commitment, right, Carl? The other thing you've got to remember is over the last 30, 40 years, American literacy and numeracy standards have fallen. Now, how do you have a modern industrial workforce that suffers from low literacy and low numeracy standards? Well, you can't. China's ability to eventually become the industrial power that it is today is premised on the fact that from 1949 to today, literacy has gone from 20% to 95, 96%. That's what's happened, right? So unless you're willing to do the things needed to turn around literacy and numeracy, and then create the skills necessary for these industries, the industries aren't going to come back unless you're willing to import the workers, right, from other parts of the world. And I'm not sure at the moment that the politics of importing workers in America plays in a way that makes this easy to do.
Very well said. This has been a fascinating conversation, Dr. Warwick. We have covered a whole range of subjects. If people wants to follow your work, where would they go?
Probably 2 little places. One is my Substack, which is warwickpowell.substack.com, where I try to publish something about once a week. Every now and then I accidentally publish 2 things, but certainly I don't want people to have high expectations that there'll be that on a regular basis, but roughly once a week. And the other place is I have my own little channel for very different kinds of discussions, mainly far more technical around global South economic development, and that is TIO Talks with Warwick Powell. So they're the 2 places that you can have a little bo peep at the things that I do and the things that I guess concern myself and the people that I work with.
Well, there you have it, Dr. Powell, Warwick Powell. Thank you for making your time to join us today. And thanks everyone listening, tuning in. Please follow Dr. Warwick, follow his work, and leave your comments below on what you would like to see next. Thanks, guys.